Leading a panel discussion on food and agriculture at the Asian Financial Forum 2013 in Hong Kong is Tim Hornibrook, and he joins us from Sydney, Australia. Tim, thanks indeed. And can I really start by asking you about your outlook for the food business and certainly where it comes to asset management and food?
The message is about opportunity but also challenges within agriculture, and particularly when you're focusing on Asia. It's an opportunity because it's a very underinvested space in terms of institutional investment. It's a challenge for a number of reasons. The first one being it's actually very difficult to allocate capital into, but secondly, from the region's perspective itself, it's a challenge because the region is growing economically, it's growing in terms of population, you've got the shift in terms of urbanization, and all of those things create pressure on the food supply system. And from that, Asia has to make choices about how it's going to access supply moving forward.
Well, speaking of that, Tim, of course, the World Wildlife Fund has come up with a report recently on China about its ecological deficit, mainly due to urbanization and economic progress. But what implications does that really have for asset management?
If you look particularly at China and some of those things you've just mentioned there, if you take the period 87 to 92, China was losing 1 million hectares of farmland a year to urbanisation. If you then look what's going to happen over the next few decades, there's going to be 3 billion people across the globe shifting to the middle class. 90% of those people are going to be in Asia Pacific. You've also got the challenge across the Asian region that the majority of cultivatable land is already being farmed. You've also got challenges around water deficits as well. But all of those things being challenges create investment opportunities as well. And I think if I look particularly at Hong Kong, there's the opportunity to participate in what is a growing investment class and to continue to act as the gateway into Asia, both for institutions that are looking to raise capital and invest that abroad, but also for Asian investors that are looking to access this macroeconomic story around increasing demand but supply restrictions when it comes to agriculture.
But isn't there a problem really with that argument? Because there is this moral hazard. You've got the grim prospects of food resources, at the same time very good prospects for asset management.
Yeah, I think it's actually the ultimate sustainable investment if done the right way, Martin. I agree there are moral hazards if you get this wrong, but ultimately a sustainable investment into agriculture is about increasing food production, and hopefully over time that will help alleviate the growing gap that we're seeing between demand and supply, which is causing upward pressure on food prices.
Well, looking at the perspective of all of this, how large are agricultural funds under management, would you say, including presumably Macquarie as well?
It's an interesting sector. It's a 10,000-year-old sector that's only just being discovered by institutions. So if you look at the amount of capital that's been allocated into it today by institutions, it's about $35 to $40 billion. But it's a sector that has an investment size of about $8 trillion, and about $1 trillion of that is immediately investable. So there's a huge opportunity from an investment management perspective to contribute into increasing food production, into increasing productivity, and ultimately to grow an industry around that. Today, the investment class has attracted about $35 to $40 billion worth of institutional capital, but the potential investment size is $8 trillion. So right. What I think moving forward over the next 8 to 10 years is you will see a significant increase in the amount of capital being allocated by institutions, but we do need to remind ourselves that it's actually a very difficult sector to allocate capital to. Why? Because it's predominantly a private sector, and particularly when you look at the farmland level, it's a sector that's dominated by small-scale family farmers. So an institution just can't come along and allocate $1 billion easily. It's an institution that requires a long-term investment time horizon and the ability within that to be patient as you accumulate assets.
Now, you mentioned Hong Kong. How significant is Hong Kong where it comes to managing this sort of asset?
If you look at Hong Kong, what you've got is a robust regulatory regime. You've got a friendly tax environment for institutional funds. You've got liquidity in the market. and importantly, it's a place where institutional players like ourselves can get access into Asia, both from a sense of being able to invest directly into Asia, but also from attracting capital out of Asia into other regions around the world.
So Tim, you're attending the Asian Financial Forum 2013 and presumably looking forward to putting the sort of views that we've just been hearing.
Most definitely. As I say, it's a huge opportunity in this space. It's an opportunity that is very much being driven by what's happening in terms of the Asian region, in terms of economic growth, urbanisation and changing diets.